Good evening, everyone. It's us again at Big Classic Forex. So we are here on section 4 of our ICT strategy and basics, and today we'll be talking about fair value gap, FVG. So let's dive more further about what fair value gap is, its importance, how to spot valid FVG and examples of them. So what's an FVG? An FVG is simply an imbalance in the market where price moves so aggressively in one direction that left a gap between candles without proper trading activities. Fair value gap, FVG, simply defined as an imbalance in a market where price moved so aggressively in one direction that left a gap between candles without proper trading activities. Note, this gap often acts as magnet for price to later retrace into it before continuing normal trade activities, and they consist of 3 candles. The gap often acts as magnet for price to later retrace into it before continuing normal trade activities, and it consists of 3 candles. What are they trying to let us know? That FVG consists of 3 candles, and the gap often acts as magnet for price to later retrace into it to continue a normal trading activity. So why is FVG important? Why is it important? Price mostly returns to fill the gap because market seeks balance. Traders can anticipate retracement into FVG for high probability entries, buy, or low probability entries, sell. So this is why FVG is very important. The price will definitely return to fill the market because market seeks balance, and traders anticipate this retracement into the FVG for high probability entries, buys, and low probability entries, which is a sell. So let's go more further on how to spot a valid FVG. Number 1, trend line matters. Trend line matters in the sense that if your bias is a buy or a sell, you have to be very sure about that. Second, the gap created between candles. The gap created between these 3 candles. Then third, break of structure. Your break of structure, BOS, must be active. Then fourth, liquidity. Your liquidity must be active. Yes. So let's dive more on examples. This is an example of a sell side FVG. As you can see here, my break of structure is active, and we are told that FVG consists of 3 candles, and as you can see, this is the first candle, second candle, third candle. Price moved aggressively in one direction, and that's what exactly that happened here. So because of the market seeks balance, price will definitely return back to this FVG. Then traders will take participation of this retracement for a probability low. That's a sell for this. Then let's go for more example. This is also a sell side FVG, a sell side fair value gap. This and then here is a buy side fair value gap. As you can see, is well explained and details. Your first candle, second candle, third candle, and the space between these third candles, the first and the third candle, that's your FVG. As you can see, this is a buy side FVG, in the sense that price will definitely return back to this FVG because market seeks balance and traders will take the opportunity for a high probability trade, that's for buy. Diving more for more examples of FVG, of a buy FVG. As you can see, my breakout structure is here, my three candle that consists of FVG is here, my trend line is here, considering that the market is on a buy bias, as you can see, and my liquidities are active as well. This is another buy side FVG. As you can see, my breakout structure is here, my three candle that consists of FVG, and as you can see, price was retracing back to this FVG, and definitely traders are getting ready to anticipate for a high probability buy. As you can see again, this is another example of sell-side break of FVG that has been executed perfectly. My break of structure, my liquidities, my trend line, then the three candle that consists of this fair value gap, and price retracing into it and going for a proper sell, and traders that were active took a good probability sales from this very retracement to this FVG. So let's dive more to our chart. Let's get to know more of what this FVG is all about.